Hey, what's going on, everybody? It's Ryan here. Today we're going to talk stocks, we're going to talk investing, we're going to talk about making some moolah. Actually, before I start, I should start by saying that this is not financial advice. It is only for informational purposes only. Make your own decisions, do your own research. With that said, let's head into the video. So we're going to talk about three stocks I like, three stocks I own, and three stocks I've been kind of following. I look at these stocks, and what I try to do when I invest is I look for simple stuff, really, support and resistance lines. If you're not familiar with that, support and resistance lines are essentially spots in the chart or way the stock behaves where it's difficult for it to go below or go above. So resistance would essentially be resistance. The stock is going up and it hits resistance. Support would be the stock is going down and it hits support. Pretty simple. That's essentially kind of how I make a lot of my investment decisions. I use primarily technical analysis. And I also try to pick stocks that I find interesting, stocks that I like for numerous reasons. I've been playing around this for quite a while. However, probably since my income has increased significantly over the past year or two, I've actually put a lot more into the market. So I wanted to talk a lot more about these particular stocks. So if you have any questions, feel free to leave a question below. But I thought I'd try making one of these videos and see if you find it interesting. So let's go ahead, let's head into the video and let's get into the charts. So as you can see, we have this stock here, which is Apple. So Apple is a stock that I'm sure you all know the company, but essentially I got in around, I think 110. So you take a look at the stock at this line here. Let's go see if I can use this software. So 110 would be right here. All right, so you can see how it's a pretty solid support line here. Like actually right here, it's kind of a low. So it would be difficult for the stock to go below here. So right now, buying the stock right here, I really think that you're not going to have a high probability of profit. I mean, if you're looking 10 years out, I mean, you're probably going to be fine. But I kind of like to make more shorter term profits in my trades or my investing, I should say. So like what you want to do, what I like to do, not what you want to do, what I like to do is I like to kind of buy at support and then sell at resistance. But really, actually, I just like to buy in support and just hold. And as it applies, so if I was looking at Apple and I wanted to scale into Apple, I would love for Apple to get to like 108, and then I would buy some more, right? And maybe another point would be also down here, this section. You see this section here? This is called a gap, and a gap up. Usually, when something gaps up, it's very difficult for it to drop below this mark. So you can see there's a sort of good support right here. And you can see how it traveled down, but then it stopped. So this is actually a new support line. So if it breaks down here and it breaks down here, what you're going to find is that if it closes like right here, that would be really bad. But I mean, again, if you're thinking long term, you're buying a stock here at this level, especially if you're not in it very much, is not a bad idea for a long term hold. But if you're kind of anxious to get in like I am, I would probably add more to my position around here, 108, 110 level probably. And that's kind of how I look at it. And as it scales up and it goes higher in price, then maybe I would sell around 120, right? But then again, it depends on kind of your time horizon and what you're looking at. But that's essentially kind of how I look at Apple. Next, we're going to look at AT&T. AT&T, what I love about AT&T pays a 7% dividend. And actually, there's actually a pretty cool strategy that I use. It's called a collar option strategy to sort of lock in your gains and reduce your risk. And if you want to know more about that, leave a comment below, and maybe we'll make a video on that if I get enough views and interest. But recently, if you look here, you can see how AT&T, symbol T, ticker symbol T, it just gapped up recently. This actually gapped up, I think, behind the vaccine announcement, and you can see from Pfizer. So you can see how this has gone up. So it's unlikely to drop below this line here, this 28. So you have actually like a pretty decent amount of safety here, which is kind of cool. So you're unlikely to lose money, or you have a good probability. So if you buy here, even though it's sort of above the range, I mean, I think it's kind of expensive, but you can see how if you look at like going back a couple years, you can see how, this is where it used to be in 2019, it used to be in the 40s. So it's been hammered pretty hard. So you can take a look at this. So actually just buying it now, and if you have a long-term view, this wouldn't be such a bad stock to buy. However, the greed in me wants it to get hit down lower, but truthfully, I have a pretty large position in AT&T, so I'm fine the way it is, and probably wouldn't add more to this position. But then just showing you this this support line, so this is called a support line, but sometimes it becomes resistance too. So you can see out there, there's another resistance line here. Let me make another one here. So if you look here, there's a pretty solid resistance line here. So it's unlikely to go above that number, or it'll have a tough time. Or even right here, you can take a look. You can take a look here. It has some resistance here as well. So you can see that it's interesting. You see these lines that I'm drawing. It's probably going to get stuck in this range for quite some time. So this is probably where it's going to find its home. So if you wanted to get in this early, or if I wanted to get in this early, I would probably buy when it hits 28. But it's already at like 28, 28.7. So maybe I might get in at 28.25, which is not much of a difference. So again, if you have a long-term view, it sort of doesn't matter. And the last stock we'll talk about is Tesla. This is always a little bit interesting because Tesla is sort of a hot stock. It's been all over the place. Let me zoom out here. You can see how crazy this thing moves. Look at this. Can you believe? I actually bought some stock back here. Not that much. Not set 19, but yeah, I did buy some stock back here. And like, that's freaking crazy how much it's run. But again, if I wanted to get in here again and kind of go into this stock, I would probably go over on the bottom of the range. So you can take a look here, maybe right here, because of this little candle here. But I would probably say this is more likely to be support, which is right here. So the stock is unlikely to be here. So a good opportunity might be, if I wanted to get more into Tesla, I'll wait for it to get to 190, right? Looking over here, I would look at maybe even here. This might be another support line. So you can see a support line here around, what is that, 409, right? So actually buying it right here probably wouldn't be so bad if you wanted to make a quick trade, and then we'll end up having maybe go up to this this 450 level, right? I actually sold some stock right up here, and then it went down. But I am kind of a longer term holder. I want to be a longer term holder, but honestly, I have just been really playing around with stocks and just trying to get more interested in them. I like holding lots of AT&T because it's a stable stock, and it's not going to cause me stress when it goes up and down my portfolio, because I'm trying to get used to this again with larger sums of money. The other thing too is with this, with Tesla, I don't like to trade too much because it is a volatile stock. Actually, you can probably day trade this, not day trade, but then swing trade it, like buy a couple shares and then sell it. But again, it's not investment advice. This is just informational purposes only. So maybe buying it around here at the 409 mark, I don't know. Maybe actually if it was at the 390 mark, I'd probably buy some more, because it's just so beat up, and it's unlikely to go maybe 363. But I don't think you're going to be able to get it here at 363. Like if I zoom out here, you can see how much has run up. Like this here is a top here, this particular line, this area here. So you can see how this part looks, 337. So this would end up being another, see how it's support here, but then resistance over here. So it's unlikely to get to this level. But if it does, you probably pick up here. That's kind of why I like to buy in levels. So if it goes down, buy some. If it goes down, buy some. If it goes down, buy some. That's generally how it goes. And I used to be scared about buying stocks. And I just buy one share. Like that's how I started. And then when it goes down again, buy 2 shares. And I think it's just kind of a good way to sort of get the feel. And then, eventually if you lose interest, if you buy the stock low enough, you just leave it in your account and you're going to get some compound returns from this, right? And you don't even have to invest a lot. You could have $1,000. Anyways, I think that's all I have for this video. I just wanted to show you that. So this is sort of like an experimental video, playing with my new software here and my new camera. I want to talk more about personal finance. I want to talk about more investing, returns, real estate, business, online marketing, that kind of thing. This is kind of just me having some fun. So if you enjoyed this video, leave a thumbs up. Click like if you haven't already. Subscribe if you are not a subscriber. And I look forward to talking to you in the future.